So we had our first session on funding just now with Lauren and the LSE. We come to our second funding panel, and please, if I could ask Richard, David, Nicky and Paul to the chairs here, and I'll introduce once they come forward. So this is about different routes for entrepreneurs to help fund the growth of their business. Richard Spilsbury, and let's see what order we're going to be sitting in, whichever order you wish. Richard, who looks though he's going to be on the end. Yes, he's on the end. He's moving. It's like a horse race. It's moving up on the outside. We've got Richard Spilsbury, Linkstone Advisory, a great supporter of Entrecomp from inception, independent advisor to multiple different sorts of businesses. David Goodall, this end, FW Capital, providers of finance to help SMEs, particularly through the Southwest Investment Fund. Nicky Cotter, we had a great conversation. Was it only yesterday? Can't have been. Yeah. Unbelievable. Very, very good. Nicky is joining this panel from Icon Corporate Finance, specialist advisors, particularly in selling tech companies and aiding fundraising. And Paul Duggan of leading law practice Blake Morgan to give a lawyer's perspective on the funding processes. The aim is to explore those different routes and requirements for entrepreneurs, what you might have to consider were you to go X or Y, Z. Richard, if I could ask you to scene set, start in principle, some in principle definitions that entrepreneurs may feel their financing options broadly fit into three areas: bootstrapping, roughly chronological, bootstrapping, bank debt, and then some sort of equity-based stakes, but there are multiple other options. So talk us through those that you've perhaps been advising on recently.
Yeah, thank you, Greg. So I think that a lot of entrepreneurs, there are a lot of opportunities out there. I think the headline figures at the moment are that investment in venture companies in the UK, this comes from Bohurst, was down 67% compared to 2 years ago in terms of value, and in terms of the number of transactions was down about 18% compared to last year. So while the headline figures are that it's harder than it ever has been before for a while, I think the reality is that there are a lot of options out there in the UK, and the UK landscape has changed quite dramatically. Now, some of those options might be around grants, or they might be around managing your own working capital in a more effective way, or looking to your supply chain for support. And those are surprisingly common. But also the debt market, I don't think it's ever been so active. And the British Business Bank have been doing an awful lot, we'll probably hear about that later, an awful lot to invigorate the market. So there's a lot of competition, and there are a lot of very good lenders out there. There are some not great lenders as well, and if you're not,
would you care to name any? Please don't.
And if you're talking to a lender who's not very responsive, there are many other options out there. In addition, there are a lot of equity investors out there who are very keen to invest. I was talking to very well-known equity investor who've got a presence in the Southwest, and if anything, they were slightly frustrated that there was a lack of businesses coming forward. And so the overall landscape and market is much more positive than the headlines might suggest.
If I could ask Paul to talk about some of the funding routes that you've been advising on through Blake Morgan and the team.
Yeah.
How is the landscape looking for you?
It's interesting because it's something that Richard talked about was responsive funders. And I think responsiveness is key. If you get, as a business, what you want is a quick no.
You want a quick yes.
Yeah, but ideally you want a quick yes, but you want a quick no. If you go to somebody and they say, well, actually, that's worrying for you. You want funders who are going to say, actually, we can do this and we can deliver, because it gives you the confidence. In terms of the kind of funding that we see at the moment, again, some of the things that Richard talked about around supply chains, around things like that, we see a lot of funders who have capital that they want to deploy, and they are struggling to find businesses to take it, and whether that's business uncertainty at the moment because of the uncertain economic environment that we've had, whether it's around concerns around interest rates, whether it's concerns around stability in the wider market in terms of the election. So there is money that is out there very much so. And I suppose it's just a case of businesses understanding that it is available to them.
That strikes me as a very key point, that in a nutshell, there's capital out there seeking homes. Capital has to find a home to get value, in whichever structure it might be. So for all of you, in various ways, if you're seeking to grow your business for the rocket fuel of investment into your business, please do speak to whomever are your advisors. Nicky, let's come to you. Could you also talk about the current landscape that you're seeing in terms of investors, in terms of appetite for risk, routes to funding, please?
Yeah, happy to do that. So typically at Icon, we're doing...
Sorry, do you want to grab one of the mics? I think the table mics are less prominent.
Can everyone hear me? Excellent. So typically at Icon, we're acting for the kind of equity markets, and I tend to kind of put those into different buckets. So you have your traditional VCs, who are financial investors, and they will be driven by your financial performance and kind of what those metrics are. And typically they're going to hold for 5 to 7 years before seeking an exit. Then you'll have your corporate venture capital investors. Now those will be pension funds, particularly. It might be Aviva, it might be AXA, it could be Snowflake Ventures in the US, it could be any corporate that will have is looking for innovation, really, something that's going to fit into their strategic
Nicky,
roadmap.
sorry, if I could ask you just hold it a little bit
So
more.
something that will fit into their strategic roadmap. Now they have a different criteria, but they either hire professional VC investors who will run it like a VC fund, but with a view to what the thematic interests are of the business. So if it's a fintech or a health tech, you're going to kind of immediately, you can go to a CVC that does health tech or media tech, and you're kind of on the right radar for them. So they're less driven by the financial performance, albeit that is important, but it's all about where do you sit on their kind of strategic roadmap. Is there innovation? Are you doing something that they can bolt into their distribution channels or their customer sets that will drive additional revenue for them? Are they trying to, we actually acted for a company out of Wales called Weltify. We went to a raft of typical VC investors and corporates. They were invested in by Aviva, because Aviva at the time were looking at their digital transformation story. How could they move into a totally new customer segment? And Weltify's offering was that you could invest for as little as £1. And obviously they went on to kind of invest in them an initial 5 million. Subsequently, they've now bought them. So there's the VCs, the CVCs, and then you'll get also off-balance sheets. So again, a Bristol business we acted for previously about 18 months ago. We got investment for them from New York Moody's, and they made an investment off-balance sheet. So there's all sorts of different kind of pools of investment, and equally, a lot of the kind of big companies will also have their in-residence programs. Another client we acted for was in the JP Morgan residence program, initial funding of 2 million, working on the kind of product market fit, their go-to-market strategy with the expertise of JP Morgan. Subsequently, we went on to do a 10 million round for them. So it's all about kind of identifying, your sector perhaps, and reaching out to those investors that invest in your sector, because they will have a different lens of how they look at your business and your business performance.
Thank you. Let's come to David. If you can talk to us about the Southwest Investment Fund, and maybe a little bit about what's the sort of de minimis, what's the smaller end of the scale up through recent work you've done and so on. You try that yellow mic. You never know, it might work.
Do you think so? I've got quite a loud voice anyway. Good morning, everybody. It's lovely to see everybody here. It's quite a serious subject, isn't it, funding? It really is, but we'll try and sort of make it as light as we possibly can, because ultimately we want it to be as accessible to businesses as we can possibly make it. So the Southwest Investment Fund is delivered by the British Business Bank. Richard referred to that earlier. It's for the Southwest, it's £200 million of capital, basically, that's committed for what is a 5-year fund. We're just about to come up to the first anniversary of that now. It actually starts at £25,000 of funding. Right. And SWIG, Southwest Investment Group, a couple of people are here today from SWIG. They do 25,000 to 100,000 of debt under SWIF. FW Capital, who I work for, we do 100,000 up to 2 million of debt. And then Maven Capital provide equity up to 5 million, but they will start as low as 150,000 actually. So some of those younger entrepreneurial companies that were referred to a little bit earlier, like the suspension bridge maybe, where there might be a bit of an equity play required, then Maven could potentially look at that avenue. In terms of the types of companies that we're looking to support, they need to be Southwest based or have a material presence here in the Southwest. And what we're looking to do is find a way of supporting businesses actually that the high street banks or traditional sources may not be able to support. And I'm not being critical of the high street banks at all. Every institution has a financial risk tolerance and framework that they work to. What we're trying to do is fill a little bit of a gap that has been in that market ever since I've been in the industry, which is sort of just over 40 years. So what we're trying to do is find those businesses that could do with that support. One thing I'll say very briefly is that I think some businesses are quite nervous about taking debt. Probably for some of the reasons that Paul alluded to around the interest rate environment, the inflation, which is now down to 2% as at today, which is really positive news for us all. Actually taking debt into a business can be a really positive thing to do, because if it can accelerate the growth plans that you've got, but not put a business under too much strain, or under strain, I should say, from a cash flow perspective, then actually it could give the ability of a business to move forward and grow far faster. Southwest Investment Fund is really helping unlock that to the benefit of the Southwest economy, and that's one of the key things that we're looking to achieve here.
And just to your point, David, we've got a session this afternoon with Rupert Lohman, who I don't know if he's here just yet. Two businesses. It's a session called We Go Again. His first business, absolutely debt averse, would not countenance taking on debt to propel that business forward, and succeeded extremely well, as it happens. Second business, immediately they're getting equity play right from the very beginning. So different stages of businesses, different psychologies have different impacts when it comes to thinking about funding rounds. Let's come to this. What about Steph mentioned earlier about the pre-rev category in the EntreConf Awards. What about pre-revenue funding processes and opportunities? And I'd like it both from a legal, advisory and financial point of view, please. Who's going to dive in? Legal, we'll start with you, Paul, why not?
Righty. I think that comes back to something that Lauren mentioned earlier, isn't it? Is really going back to your business plan. Go back to your business plan. You know, what is it that you intend to do? What is it that you are looking to deliver? Interrogate your business plan and really see what it is that you are about as a business. I mean, when we come in as legal advisors, we typically tend to come in, you know, at execution stage. You know, all of the really exciting stuff has been done, and it's just up to us then to make it happen. But I think, you know, it comes back to going to your business plan, you know, looking at it, making sure that you interrogate it fully. You know, what are you doing right? What are you delivering on? What are you not delivering against? Because, you know, those type, when you come to funding, those are the types of questions that your funders are going to be asking you. You know, so don't kind of shy away from them. Be thinking to yourself, you know, can we really get into the weeds here? What are we doing well? What are we not doing well? To the extent that we're not doing something well, is it because we've had an evolution in the business and we're actually delivering something else? Do we need to update the business plan? So I think that would be my number one, my number one pre-revenue tip is really interrogate what it is that you are about. Understand, you know, the strengths and weaknesses of your business. Understand, you know, reflexively, you know, okay, what am I going to be asked, and what would I ask? What questions would I ask about these particular issues, and what answers have I got for those? Because those are going to be the kinds of things that any pre-revenue funder is going to be asking.
And Richard, as an advisor, when it specifically comes to pre-rev, what's been your experience, and what's your key advice to entrepreneurs here?
It's probably it can be one of the hardest categories, but it is possible. And certainly in the Southwest, I think we're very lucky. I mean, there's startup loans available. Again, probably HW Capital probably support them as a one source. There's also in the Southwest, we've got events like Silicon Gorge, which TechSpark heavily supports, and we work with Linkston, with
We can't hear. Can we get the mic along, please? Apologies about some of the sound issues.
Sorry. There are some startup debt options and startup loans, which are again backed up from the British Business Bank. There's also Silicon Gorge in the southwest, which is an opportunity to support startup businesses, which is run by TechSpark. And that's a great opportunity. We've just had it in the last month. A fantastic business is given the opportunity to present to VCs who are active players in the local market, and also private equity. We also have some local private equity-based businesses. But the other route to think through, I think, is think about your industry, because there will be industry-specific investors and there will be industry-specific options available for you. So, for example, CGF are here today, and they can provide some very early stage funding for the right business at the right time in the creative industries. Then the other area to think about is, we were saying, is about your business plan and trying to make sure that you align your ability to demonstrate your proof points with your cash requirements, and that can be really critical and really persuasive to investors and backers as well, that you have the knowledge and the understanding to make it work.
Let's, unless there's specific other points about pre-rev, not sure either David or Nicky. Nicky
just
wants
I'd just add one point on that thematic piece that you just
again,
talked
if you can hold the mic right up.
Yeah, I would just add one point. Seek out the accelerators that are specialised in your sector. And I can give you a great example. A company I acted for a while back called Dr. Care Anywhere. They did telemedicine, and there was a business called Babylon, which was a kind of big competitor in the space. So they got into the health tech hub, which is where everybody comes, because you can signpost everyone who's looking for innovation, looking to invest in health tech, come to that hub. And they met all the right investors day one because they were in that particular hub. So, and that's the same for media, for fintech, for health tech. And then the other thing is, obviously, we've got Set Squared here, if you're a kind of local business, whereby, the investors will come to, they'll do road trips of the Southwest, they'll come to the big hubs, they'll see the businesses. And whilst you're in there, if you get onto their programs, you've got real experts that sit around that will help you. You've got marketing experts, you've got, advisors like ourselves, you've got legal experts, and they will kind of help kind of shift your thinking, kick the tires on your business, so they can give an enormous amount of support. And as I mentioned earlier, Mazet Smart Data, they came out of the JP Morgan in-residence program, and all that thinking around the help that JP Morgan gave them in terms of their business plan, their go-to-market, their revenue model was invaluable to them, for sure.
Thanks, Nicky. We'll come to David and then Richard. David.
Just very briefly, Richard, you mentioned the startup loan scheme operated by Southwest Investment Group, up to £25,000 per director, 6% fixed. Great way of actually raising some funding. I would also just like to shout out the likes of TechSpark, NatWest Accelerator. Barclays have just put their Eagle Lab here into Bristol as well. There's a great infrastructure for these new startup businesses, an amazing support network. I think we're very lucky here.
Sorry, just on that, prior to you, Richard, a couple of things. One, you mentioned TechSpark. We're delighted that Ben Shorrock will be talking little introductory remarks tonight at the Entreconf dinner about a big event that TechSpark are running. And two, NatWest, the accelerator program you just mentioned, Ellie will be talking at a session towards the end of the day tomorrow. So again, networks, contacts and so on. Third point in this direction is advisors. All forms of advisors. I'm being neutral in saying this, but we have a session with Burgess Salmon tomorrow precisely about how to get the most out of your advisors, including their networks of contacts. Richard.
Sorry, I had to add, there's also free money available effectively from WECA, who are our local LEP, and they will offer grants for early stage businesses and other support to help them move forward. So definitely worth looking at that.
Could you just put a little bit more flesh on that, if I may? When you say grants for early stage, I mean, we're talking 10s, 20, 50 grand. What type of things and what type of? I mean, I don't know how familiar you are with it, so I'm bouncing you.
There are a couple of schemes that they run, and a lot of them based around giving advice, and so there are some training programs, but also there's some hard cash so that you get a mentor. So if you need an advisor, and their programs mean you can choose who the advisor is, and you can choose someone from their list, then you can get advice from someone who should be able to help you move the business forward. It's a program that is not everywhere. For example, it's not in London. It's not available in London. and the Southwest, Bath, Bristol, one of the few areas to have such a programme.
Good steer indeed, Richard. Again, it's showing the power of advisors, people who are connected to know the landscape. I'm going to bring in Nick Sturge, I think, at this point. So if we can get a mic to Nick in the second row. And Nick, you just, I know many of you, everyone here will know you, but just briefly to introduce yourself, please.
Thanks, Greg. Nick Sturge, independent, but I have a portfolio or tapas plate of clients, including TechSpark. So I've worked with entrepreneurs over many years. I did an IPO back in the 90s. And I think the key thing for fundraising options is for entrepreneurs, be they first-timers or subsequently, is understanding the cost of capital. And, you know, grants appear free, but they're not always free in terms of the management tax and the other implications of the business. IPO comes with a big cost, but for us it was exactly the right type of funding route for profile and flow of capital, but it came with a huge management tax. So be interested to hear comments from the panel on the debt, the equity, the grant, the kind of how you support entrepreneurs in understanding that cost of servicing that finance.
And whilst our esteemed panellists are cogitating about their answers to that one, Nick, could I ask you to give a bit more detail? You mentioned your own IPO. When, what scale, just a little bit of a context, please.
So some people in the room will remember the dot-com boom. We had a hardware business, which was unusual at the time in the mid-90s. We were 3 years old. We wanted some money to develop a product, so we went to a market, the tertiary market, which is called OFX at the time, doesn't exist anymore. Lauren can probably say what's replaced that. We raised the heady sum of £1 million, which was exactly what we wanted. We had some great advisors, Burgess Salmon being our primary advisor. And then in 1999, the kind of share price went through the roof because of the dot-com boom. And we thought, well, this is the opportunity to go to the full list. So we moved to the main market, and we aimed for 25 million, but the market was crashing around us. We raised 17 gross, of which £900,000 was then spent on costs. But actually that 900,000 was dwarfed by the management cost of servicing 7,000 shareholders that we then had. But it was still the right thing for us to do. Yeah. Absolutely the right thing for us to do. So it's about understanding the cost of raising money.
It's that net balance between time, cost, effort, whatever, fees, all of that, against the benefit that enables you, in that case, to grow.
It's about making an informed judgment, and that's the key.
So to each of you, who'd like to pick this up first, please? Looks like Richard's going to go first. Yeah.
So I think it comes back to you need to choose what's right for your business at the right time, and also think about the advisors around you. So, for example, with debt can be amazing because it can be so quick, rather than having to go round around the houses asking for investment. It can impose some pretty good disciplines on the business, some quite sensible disciplines, and that can be a positive. And so there might be a tax, but there might also be a synergy. And the same can go for equity investors as well. So you can get some who are very, very passive, which might not be bad, but you can get some who want to be too involved, advising a founder, and her investors were always pulling in different directions, and they were all on the board, and that was just too proactive, and it meant the business couldn't move forward. But alternatively, you can get equity investors, who can really help supercharge the business because of their own networks, their own experience, and they're very experienced, and they have very good practices. So choose your investors wisely, and look to your advisors to help you make those choices and manage the right investment for you.
Just on that front, one of our speakers at EntreConf, when it was a virtual event, was Levi Roots talking about reggae sauce. He went on and serenaded the dragons in the den, not necessarily the advisory route, but there we go. And as a consequence, Justin King, then running Sainsbury's, contacted, and then there was access to the whole of the Sainsbury's network for that product. And yes, it was an investment, but it was about the network and the consequentiality. David?
Yeah, sure. If we're looking at sort of basic pricing of debt, so base rate at the moment is 5.25%, okay? And I think, again, as we alluded to a bit earlier on, I think that is putting some people off because they see that as a relatively high interest rate.
And do you expect that to fall in the coming quarters?
There's a massive disclaimer here, right?
Yeah, okay, You're amongst friends.
Massive.
We'll edit this bit out. Say, no, I think it's going to fall.
Okay.
Buy now.
First point is
Okay.
actually, when you look back, so, looking back over the decades, actually 5.25% is actually a relatively low rate compared to where it has been in my lifetime in the bank. In terms of whether it's going to fall, the expectation is yes. With inflation rate today at 2%, then that I think will give fuel to that actually taking place. The next interest rate decision is tomorrow. I think the general view is that it won't fall tomorrow, but probably the bet is on for August. Maybe a fall by maybe 25 basis points, so maybe down to 5%. And with further falls predicted at this point, clearly we've got elections coming on, an election coming up, so that might just throw a little bit of confusion into the mix. But so base rate actually is relatively low. I think for anybody looking to borrow money, you need to understand your rates very, very clearly, and what does that mean to your cash flow, because you need to work out whether or not you're actually able to service that debt. So actually debt can start at a relatively low price. Maybe, for us it starts at about 6.75 fixed, so 1.5 above base, so pretty low. But you can actually get up into the high 20s and higher depending on the risk framework of your business. So you need to go in with a very, very open mind, and you need to talk to people to actually understand, okay, what are they offering and at what price is that, to make sure that you are comfortable you can afford that.
Paul.
Yeah, just to jump in on that. So I think the key is understanding the why you want funding and the what you want from funding. And I think, if you go into it with that kind of mindset, then you can be thinking, okay, well, why do I want it? I want it for fast growth. I want it for a specific piece of kit. I want it for whatever it might be. And that will then kind of drive your decision making in terms of where you're going to go to. Am I going to go to debt? Am I going to look to, I'm an existing business. Can I use my debtor book to fund it via way of invoice discounting? Can I be going and getting some kind of debt funding? Can I service the debt? What does the margin look like? How quickly do I need it? If you need money very quickly, then it may be that then you come into the kind of debt, well, the margin environment that we're talking about, where base is 525, but your margin may be 8, 10, 12. There will be funders who will very happily, put that funding into you, but it will come with its, back to the next point, it will come with its cost. But the point is that if you understand why you want the funding and what you want to do with it, that's then going to drive the decision whether you go for debt funding, what type of debt funding you go for, or whether you look for equity investment.
Nicky, thoughts about this, and to Nick's point about the cost of doing business,
Yeah,
essentially.
so I mean, obviously we've heard Lauren talk about the kind of the IPO route and the kind of costs with that. I mean, typically, if you're looking at equity investment, typically you're on a Series A, you would give for the money, whether that's 5 million, 10 million, is typically about 25% of your business, okay? But that can have a transformational effect, because, and another little vignette here, World Remit had been banging on, they were doing remittance flows between Africa and the UK, and part of that kind of value chain, they had to have relationships with a lot of banks. They'd been knocking on the doors, having loads of conversations with these banks. As soon as they had Axel on their cap table, I kid you not, Catherine's she's the co-founder of that business. She said they were all phoning me, because the credibility of a tier 1 VC on your cap table can open a huge amount of doors. And if they've effectively what it says to the banks, you can trust this business because A, they're well financed by a tier 1. They've kicked the tires on the business, so the risk of kind of partnering with that business is minimized. So it's a kind of a big thumbs up, and they'll, big funds like that will take you all the way and scale you to the US, so you might think you're giving away 25% of your business, but the risk reward, the value that the right VC can give you is you can't quantify.
Many and varied are the different routes to financing. I'm going to ask our panellists for closing thoughts in a second, but just a reminder, we're going to go straight in from this into the keynote from Evelyn Welsh, which will be by Zoom. We'll be able to ask questions as well, but that's about the vision, the extraordinarily ambitious vision for Temple Quarter Enterprise Campus, which will be coming up shortly. We're bringing that forward to 5 past, if that's okay, people in the window over there. So, closing thoughts. You know, when you look at the landscape, you look about perhaps about the debt aversion. Debt aversion as a principle. People don't like to take on debt. It's an encumbrance. Process about what it means in terms of management times, cost. But the other side of it is debt, equity, whatever, financing is the rocket fuel. That's what's going to propel businesses forward for those who need it. Further, last closing thoughts from you each. I'm going to go this way round. Start with David and go across and end with you, Richard.
The infrastructure of people, professionals, across this region is phenomenal. My one piece of advice is talk to people. Get advice, be open, don't be afraid to ask the daftest questions you might have in your brain, because I do that all the time, because you will then find the networks will help you, because there's a real desire to help businesses succeed in this part of the world, more than I've ever known it be, actually. So yeah, use your networks.
Great.
Yeah, absolutely. So always think about mentorship. All the best kind of most successful people in the world have got mentors, whether it's sports stars, whomever. So absolutely tap it and get as much free advice as you can. And then, you know, obviously think about kind of getting your business plan as good as it can be. Get yourself into a position of choice from VC investors, and that includes the VCs and the corporate ventures and all the others. Get competitive tension in your deal. And, you know, get advisors on board, I would say, definitely, because they can double your valuation. You know, on the deal I'm working on now, double the valuation, more than doubled it. So that has an immediate impact on your you know, your dilution and how much of the company you retain as you scale and grow.
Yeah. Paul.
Thanks. Stole my thunder a little bit, because those are the two things I was going to talk about: business planning and
pass
talking
the mic
to your
along, fine.
Exactly. But no, I think yeah, the really sexy stuff. I think exactly as Dave says, you know, talk to your network. You'd be, you know, your legal advisors, your financial advisors, you know, everybody in that ecosystem. You know, you would be surprised who knows who and who knows what other opportunities might be available. I think to the point that you said about your business plan, yeah, absolutely evangelical about that. Understand your business plan, understand where the potential pushbacks are going to be, and you can really make a difference to your business with that. I think, yes, so I'm essentially echoing what they've said.
Very good. Richard, you've, you know, it's the fourth in this list. You're probably going to re-echo what's been said, but maybe some fresh perspectives as well.
I'll keep it to three things. First is sort of build confidence in your plans. Whether you're listed, you need confident plans that people are going to follow, or if you're starting up. So build confidence through business plans, and because you can't grow a business by cutting costs. Secondly, make sure that you understand the options that are relevant to your business at the right stage. Whether it be debt or whether it be specialist funding for fintech, say with Nicky, and then finally, the third point is don't be put off. I mean, there has been a hard trading environment. You might be at an early stage of your business growth, but the investors and lenders understand that, and they're willing to take things into account. So don't be put off because you think that the business does not look perfect. A business doesn't have to be perfect to get on with it.
Well, there we go. I think there's a lot of very smart advice there, and just that very last point from Richard, which is, you know, be brave perhaps. We've got a session right at the end of tomorrow. We've deliberately programmed a keynote at the end of the second day, which is a bit counterintuitive. It's because it's bloody brilliant. It's Nick Hounsfield talking about his new venture, and one of his key themes is fearlessness, which is so important. We will be having this VC, we go from VCs to VCs, almost a link? No, don't do that, in a moment. But for now, I would like to say, on your behalf, thank you respectively to Richard Spilsbury, Linkstone Advisors.